Okay, the meeting is being recorded. Hello, everyone. We are gonna go over Milestone 2 for ECHO 201 for microeconomics, go over the requirements to be proficient in the milestone, and we'll probably briefly touch the requirements to be to also be exemplary in the final, although we will go through that later on when well, in the final project live webinar. I would like to introduce myself. My name is Kiara Yates, and I am not Nicole Soto, as you can see. I teach economics, ECHO 201 and ECHO 202. I've been teaching for Southern New Hampshire since 2012, and I just now took over for Nicole Soto on the live webinars. We just haven't changed the account over yet. You've done Milestone 1. You've introduced your firm. You've provided a brief history of your firm, and now you're ready to dig into the microeconomics to start your research as a consultant for your firm. The first thing you're going to research, which is the topics you've already learned about, are supply and demand conditions. To research the demand and supply conditions, you will have to use the financial reports of your firm. You will have to go on your firm's website, find the financial reports for the past 5 years, and you will have to use the data that you find in those financial reports to determine the demand level. How much product is your firm selling? So how much are the sales of the product? That will tell you what the demand for your product is. One of the first requirements is to evaluate the trends of demand over time. When we talk over time, we're talking of at least a 5-year period. So make sure you chose a firm that has a 5-year period of financial reports. It's not a firm that went public maybe only 2 or 3 years ago. If that is the case, then all you'll be able to do is the past 3 years, and you'll just have to explain to your instructor, and that'll have to be your demand, your trends over time. But if you've chosen one of the older firms that have been public for a long time, you should be able to go back 5 years. The last financial report available should be the 2017. The 2018 will be available next year. So 2017, you go back all the way to 2013. And you'll have 5 years. To evaluate the trends of demand over time, you can use the determinants of demand. There's 5 determinants of demand, as you can see in this sample paper: income, price of related goods, taste, population and demographic, and expected future prices. If you go through these determinants and you do all 5 to determine your demand trends and to explain how demand has changed for your product over the last 5 years, you will most definitely be exemplary in the final. And so if you do it in the milestone, you will not have to go back and rework this element. You can work it one time, nail it, and just forget about it. This way you can move on. I mean, it's ideal to work on it one time and maybe just use the time you have for the final to tweak your final, go over grammar, spelling, citations, enrich maybe if your instructor provides you feedback about it. But otherwise, if you can get these elements right and exemplary at the first attempt, that would be ideal for you guys because it would mean less work after. So the first element that you're going to cover in Milestone 2 is the trends in demand over time. As I said, you will use the financial report from your firm. You will go look at the sale figures in the financial reports, and that is how you'll be able to determine the demand. Another really important part that you can use from the financial statements is a section that would be called management discussion or analysis of the financial conditions of the firm. you should be able to find the section that has sort of notes about the financial report. In those notes, you will likely find for your firm comments that management did about growth during the year or decline in sales during the year. During that year, they might make comments about their market positions, if it's strong, if it's stronger, if it needs to be strengthened. Those comments are really, really important for the development of both Milestone 2 and Milestone 3 because they will give you the additional insight you need beyond the numbers to find out more about your firm and to be able to evaluate the trends and to be able to make your recommendations when you get to Milestone 3. So don't neglect to read them all. They might be a little boring or you might think you know already, but just read them all when you find them in your financial report and go over them, read them again for Milestone 3, and you will have pretty much all the information you need to complete these milestones in a proficient, if not exemplary way. Once you have established the trends in demand over time, you also want to go and research your supply trends. So you want to analyze demand and supply together, basically. When you analyze your supply trends, you will also identify the determinants of supply. Just like we have the determinants of demand, we have the determinants of supply. Those will be useful. You don't have to go so much in depth with the supply as you would with the demand, but you still have to try and establish the trends over time. The other requirements for element number 2 for the supply and demand trends is to include a graph or a chart of the sales for your company. So that is another requirement. The graph or the table, as you can see in this sample paper, it says it can be in dollars, product quantity, or number of customers. Whatever chart you find, whatever is relevant to show the demand and supply trends for your firm, then use that chart. Again, you will want to use 5 years of data or even more if you can find more or if you want to go beyond to show the trends. For the supply side too. The determinant of supply are also 5. So the input costs, technological improvements, prices of substitutes, the number of firms in the market, and the expected future prices. As you can see, expected future prices are a very important factor, both for demand and for supply. If you expect a price of a good is going to increase in the future, you might increase your purchase of that product right away so that you are stocked up when the price goes up. While if you expect the price of that product to go down, you might lay off and wait till the price goes down. So the expectations of future prices affects our immediate consumption of a good, especially if it's a good that doesn't need to be consumed immediately, like maybe gasoline. You probably wouldn't wait, obviously. When we talk about supply, one of the major determinants of supply would be the input costs. If you're researching Starbucks, for example, lately there is a coffee crisis caused by weather conditions or illness of the coffee crops that is prospecting, a decrease in the coffee supply and the coffee bean supply, which will eventually lead to an increase in future prices. People know about this, read about this in the news. So there you have change in input costs. Starbucks know there's going to be a change in the input costs. And there's also an expectation of a change in future prices. You have 2 determinants. Another important factor that affects supply is technological improvements. For example, if you're researching a company like Tesla that's on the forefront for electric cars, they might come up with a new battery, or they have actually changed their factories to make their production more efficient. So any technological improvement is going to affect the supply side of a product, and ultimately the prices charged, the amount sold, the amount produced. Once you have been able to develop the second element of demand supply, you're done with this section. You don't have to research demand and supply anymore, and you're going to move forward and examine the price elasticity of demand. What is price elasticity? The price elasticity is nothing else but the reactiveness of consumers to a change in price. If the price of a good increases and consumers change their consumption patterns, which means they buy less of it, then you would say that the demand for that good is price elastic. It's elastic in respects to price. If the price changes, the amount consumed will change. In the price elasticity section, you will be developing 3 elements. So this is going to be a little bit of a longer section. It's going to be 1 or 2 pages long. First of all, you are going to analyze the available data. So you can use, for example, the demand trends that you have researched in the previous element and see if any of those demand trends and changes in demand might be linked to changes in price. And using that data, you can justify how you determine the price elasticity of demand. You don't necessarily have to sit down and calculate it with a formula. What you can observe is that when there is a change in price, there was or there was not a change in demand. What you also want to make the distinction is the changes in demand in the short run or in the long run. I'm sure you all participated in Module 3 discussion, where you had to examine the price elasticity of gasoline. And overall, the price elasticity of gasoline is inelastic or fairly inelastic. It's not perfectly inelastic because there are some small changes in consumption, but it's fairly inelastic. However, in the long run, people might change their consumption habits and decrease the use of gasoline because maybe they can buy more fuel-efficient vehicle, or they can find a way to commute to work with somebody else, so share a ride. They might find that there's public transportation available. So in the long run, people might find an alternate solution. They might change jobs and work closer to home. They are able to find a solution that might save them on purchasing the same amount of gasoline. So when you analyze the price elasticity of your product, the product of your firm, you can make that distinction. You can make the distinction of the price elasticity of demand in the short run as compared to the price elasticity of demand in the long run. Not all products might have a differentiation. If it's price elastic, it's going to be price elastic in the short and the long run. But if it's not, if it's fairly inelastic, then you might want to examine the long run and make sure that in the long run there is not a change in elasticity. Linda, I'll answer all the questions when we finish these elements. This way everybody can follow with their questions. Once you've developed the first element of price elasticity, you can move on to the second, and you want to explain the factors that affect the consumer responsiveness. So in this case, the factors would be the determinants of price elasticity. And you have gone over these or some of these during your Module 3 discussion. For the purpose of this milestone, you would want to go over some of the factors of price elasticity to be proficient. But for the purpose of the final, you will want to have all 5 the determinants of price elasticity to be exemplary. So if you go through all 5 of them, you've already set yourself up to be exemplary in the final because you review all the factors, which would be the availability of substitutes, the passage of time, which I said was the short run and long run, luxury or necessity, definition of the market, and the share of the budget. When you go to the definition of the market, you can go about this in different ways. A lot of students seem to identify the market as like more a rural market as compared to a city market, for example, where there's more competition, especially in the case of gasoline. However, you can also go wider. When we talk about gasoline, you can have the market, which is the gasoline at the pump. So the different gas pumps competing against each other for 1 or 2 cents difference in the price of gasoline. And then you can look at gasoline as a commodity that is sold on the global markets. So for example, none of the companies that I can think of might have this sort of distinction, but you can make you can just distinguish the market in a more domestic market, and if there's a wider market for your product, you can consider that as definition of the market. The third and last element that you will be developing for price elasticity is how does the price elasticity of demand impact the pricing decisions of your firm? How, if your product is price elastic, does your firm consider that when it's setting prices? So does Starbucks consider that, for example, people might not buy coffee from them if it becomes more expensive? Will it consider that and maybe keep the prices the same and eat into its revenue rather than losing customers? So you want to see that. This answer you might also be able to find in the financial reports and in the comments that the managers make to the financial reports, in the notes to the financial reports. Sometimes they will make comments about changes in input costs that increase the price of production. How did the firm react to that? Did the firm increase its prices? Did it not? And from there, you can gather how the firm would behave in case of changes in price, and you might be able to gather how they consider their price elasticity. Do they think that their price elasticity is elastic or inelastic? So look at those notes. You will find a lot of useful information, and you can find those in the financial reports of your company. As you can see, when you look at this final paper, the sample paper, which is available in the final project supplemental resources of your webpage, you can see these links and you can click on them, and there's videos that help you and understand better the concepts that you will be applying in this milestone. So you can click on these videos or additional materials that are here, and you can look at them and go a little bit more in depth before you develop the element, if you want to. The other resource you will find in your final project supplemental resources is a video that explains how to use the Shapiro library, because inside the Shapiro library you can also access the financial reports of your company. Now, you can access the financial reports of your company very easily through their website, because they have to be of public nature, and the companies, the firms, have to post them for their shareholders to access them. However, you can also go through the Shapiro library to research your firm. So if you watch the video available through the supplemental resources, and it's under the YouTube SNU channel, you can access the videos that help you that show you how to use the Shapiro library. These are the 5 elements that you will have to develop for Milestone 2. To answer Linda's question now, if you submit this as part of your first milestone or as a separate paper, this is to the discretion of your instructor. I leave my students the freedom to continue from milestone 1 or to do a separate paper. I do not have a preference. It's the same to me, because I will only grade the milestone 2 section anyways. Most instructors, though, prefer that you post them as a separate paper. You can post them as a separate paper. It just makes it easier for them to check for originality, make sure you've listed all your references, all your sources, and you've cited them correctly. If you do post it as a separate paper, make sure to include again a title page, running headers, page numbers, because it would be a document of itself. Martin, you chose GM. Should I focus on one model like trucks or on all the models? If I were you, I would focus on one models because the market for trucks is obviously different than the market for sedans. So in general, you could research everything, but if you focus on a line of production, I think your life would be easier. Now, when it comes to price elasticity, however, in general, for the automobile industry, you will find that price elasticity of demand might remain quite the same, whether it's trucks, sedans, or SUVs. So, and you might find it difficult to separate and identify the demand trends just for trucks from the financial reports. So if you find that too burdensome, then just stick to the whole industry, to all the models. If you can find easily the information about the truck section, then go for it. Raymond is asking, if using a bank as your firm, would the approach be the same? You do the same approach, Raymond. A bank, instead of offering a product, is offering a service. So the costs of the price that the bank charges would be, for example, they charge banks charge fees for not having a minimum balance on your account, just for maintaining your account. They charge interest rates, so that's where they can be more competitive. They give interest rates for savings account. So those are the pricings that you would be looking at, the fees in terms of price for the service they offer. But yeah, you would use the same approach. Randy asks, I chose Netflix and I'm conflicted on how to go about the supply. Would technological advances have a play in here, such as increasing availability to a wider amount of people or enabling its service on more devices? Sure, Netflix is a prime example of technological advances. Another example that you can use with Netflix from, I think, 1 year ago, 2 years ago, is when Netflix announced that the price was going up. Change in future prices, expectations of changes in future prices, you can go see back then when they did announce that their prices were going to change, what happened. I think they did lose some consumers. But overall, not that many. So you could probably determine that the price elasticity of demand for Netflix is fairly inelastic, simply because they didn't lose a one-to-one in terms of increase in price and loss in consumption. So that's enough. But the technological advance is definitely one of Netflix stronghold. They increased their the movie supply. Netflix has now lost their deal with Disney, so they won't be showing Disney movies anymore after a certain date. So that could something you can research and see. So it's a change in the product supplied. So you can see how that would affect. It's going to affect Netflix. David, Netflix also in the last year or so started creating original content. Exactly. And Hulu started creating original content. And Amazon, and they're all following suit. So they're really all staying quite competitive. I know Netflix is having budget issues with its original content, which is why the seasons, like you watch series 1, like Stranger Things, and then you have series 2, and now series 3 is taking so long, season 3 is taking so long to come out. It's because they are having budget issues. These original series are expensive. Are they getting enough viewers and enough new viewers to maintain, to justify the budget for original series? Good job, Randy. Does anybody else have questions? We have another 5 minutes. Remember, Milestone 2, always follow APA guidelines for formatting. David, where should I include the loss of a government subsidy in expected future prices? So the loss of a government subsidy would cause a change in the expected future prices. So that's what you want to go see in the report if it mentions something about a change in price, because yes, that would definitely change future prices, because the subsidy compensates for the prices. Basically, producers would charge a lower price to be more competitive in the market, and the government is going to subsidize it, the difference. Oh, Tesla. I didn't even know Tesla received a subsidy. That is a new information for me. Nobody's ever mentioned it. Well, there you go. What's the subsidy for that Tesla receives? But okay, so the subsidy they will receive, you have to go see if Tesla is gonna make a change in their prices. They may or they may not. As I said, sometimes firms might prefer to take a loss on their revenue because they have such a high revenue, they can take a loss on that but keep their customer base happy if they think they have a high price elasticity of demand, obviously. Yeah. Well, tax breaks, that's on the demand side. So it's incentives to purchase. So yeah, that could be something to look into as a determinant of demand. The subsidy would definitely be something that affects the supply side. Does anybody have any questions? We have a few more minutes before I'm going to switch over to Echo 202. So just remember, you have 5 elements to develop. You're going to develop demand, then you're going to develop supply, and you're going to provide a chart. You can provide a chart, a graph, a table, anything that illustrates the demand and supply, or just the supply side of your firm. Lonia, do we make the chart or use a published chart? If you can find a published chart, you're welcome to use it. And you might be able to find it. Sometimes you can find published charts on news articles, you can find them in their financial reports and on their website. I would use the published chart if you can find it. If you can't find it, you can make your own. You can make a table, something easy. Craig Shaw, you're doing Amazon, and I'm not sure what product that I should. Did you ask your instructor if you could do Amazon and was it approved? I do not approve Amazon in my class because Amazon, if you do Amazon Prime, so competitor of Netflix, focus on that. If you don't want to do the Netflix side, Craig, then do Amazon bookseller. Only the bookseller. Don't do Amazon all the products. Because otherwise you are not going to never get to the end of it because Amazon sells everything. It's like researching Walmart. So so you can focus on Amazon Prime. Randy, thank you for the suggestion. You can do Amazon Prime or you can do Amazon the book sales because that's how Amazon started. It started with selling books online. Well, is it a subsidiary? I mean, when you do Amazon, you can just say that you're researching Amazon Prime, for example. It would be saying that you're researching Netflix, right? What you'll have to do, the difficulty with Amazon is that when you go see the financial reports, you'll kind of have to dig a little deeper to find the financial information that you need to examine the demand trends and the supply trends. Amazon is not a very easy company to research. I discourage my students from doing Amazon, from doing department stores like Target, Walmart, or anything that sell multiple products, just because it really increases the amount of research time you'll have to put in. So just choose Amazon Prime or Amazon Books. I would do Amazon Prime like Randy suggested. Just because you have Netflix, you have Hulu, it's a very defined market, and it's just, I think it's going to be easier to confine it. Yes, Craig, well, your instructor should have said something when you chose it. If you sent an email and asked about Amazon, your instructor should have said something and told you about the difficulties of researching Amazon and discouraged. I had a student who asked for Amazon and I told him no. So Jimmy, doesn't look like anybody is having connection issues. So Johnson & Johnson is hard too. Yes, David. Johnson & Johnson I discourage also because it has too many different products. You would have to focus on one product, and you have to dig into their reports to find specifically the product. You, Raymond, for banks and the supply, should I use mortgages to answer the market demand? You can focus on mortgages, Raymond. You can just focus on banking services in general also, because it's a service. Bank offer multiple services, but you know, you can focus on just the service the banks offer, and maybe the services that require interest rates, because some banks will change the interest rates just by a fraction to be more competitive. Yeah, Craig, I know you answered. I will make a note to the faculty that they need to be more accurate, you know, follow through better with students and the choice of the firms. At least explain what the challenges are if you choose a difficult firm. So we're going to end here, Echo 201. It is 9:01, and we're going to move on to Echo 202. If you have any more questions, you can email me, and I will be happy to answer any, if you would have any. Let me find the new document for macroeconomics. Oh, you're welcome, Kirsten. Here it is. This should be it. You're welcome, Katie. So here we are, starting with Echo 202. Oh, happy Thanksgiving to everybody. Randy, you are so welcome. Have a happy Thanksgiving. So Echo 202, with macroeconomics, we're getting in the most exciting part, in my opinion, of the assignments you have to complete. So far, you've had to analyze data, just look at GDP, unemployment, inflation. It's a little bit cut and dry, but now you're going to get into the heart of macroeconomics, and you're going to get into the reason why you want to learn macroeconomics, which is not only because you need to get your degree, but it's also because you want to understand better what happens in the country, what happens when the government passes a new law, what happens when the Federal Reserve decides to increase or decrease interest rates. And Milestone 2 and Milestone 3 will be the parts that will help you understand better what happens in the country, why some things happen, and what the impact is on the economy. So this is the sample for the final project, but we'll be only going over Milestone 2, which is fiscal policies. So the fiscal policies, first of all, let's clarify one thing. What are fiscal policies? Fiscal policies are policies enacted by Congress that, so they're approved, they're passed by Congress, and they concern changes in spending, government spending, and taxation. So if there's a policy, like a law that is passed to regulate interest rates in banks, that is not a fiscal policy, and it is not a monetary policy either. It's a regulatory policy. It just changes the rules of the game. But if you pass a law that increases income taxes or decreases income taxes, that is definitely a fiscal policy. Just like the law that the government passed at the end of 2017, beginning of 2018, actually just this passed before summer, they passed a law saying that they changed our income tax requirements, and that we will see those changes when we file our taxes in January. So going over fiscal policies, there's 3 slides you will need to develop. The first slide, you will need to examine the fiscal policies that were enacted before your decade started. So if you chose the 1970s, you will look at fiscal policies from the 50s and the 60s, and what policies carried their effects into the 1970s. I can tell you, for example, with the 1970s, for sure, the policies that carried their impact were the fight against poverty that Johnson started. Why? Because that increased government spending to such a level that it already started kicking in that inflation that will carry on into the 70s, and then into the 70s there's the oil embargoes that just exacerbate the inflation levels. And moving on, so those policies created the conditions at the beginning of the 1970s. At the same time, there will be policies, for example, in the 90s that created the conditions for the 2000s. Just think, in the 90s, there's the OBRAs, the budget is doing great. Clinton reduced income taxes towards the end of the decade, boosted the economy. There was the big technological boom, thanks to the big positivity of the decade, and then this boom ended with the bubble. There's a recession at the beginning of the decade. This recession could have also been caused by the extreme growth of the 90s, the fast growth of the 90s that was not sustainable. So the fiscal policies, what fiscal policies were enacted during the 90s that carried their impact into the 2000s. So you can do that with every decade. In the 70s, there were no relevant fiscal policies that really could curb unemployment and inflation. And this is why the 80s started still with high inflation, with some unemployment issues that had to be dealt with at the beginning of the 80s, is by the lack of effective fiscal policies of the 1970s. So that is what you're going to focus on your first slide, is basically find out what happened in the past that impacted the beginning of your decade. What caused the 1970s to start with high unemployment and high inflation? What caused the 80s to start with high inflation? And so forth. The 90s, well, the fiscal policy that affected the start of the 90s would be military spending, because the 90s started with a war that was started at the end of the 80s. So all these policies impacted the beginning of the decade, and you're going to find those. So you're going to go in the past to frame your decade. Obviously, you're going to use the slide to show the main elements, like key concepts, keywords, and then you're going to develop all your content in the speaker notes. You absolutely need to develop that content in the speaker notes. As you can see from this sample paper, which you can find in your final supplemental resources, there are some links you can click on. These links only work when you run the PowerPoint presentation. So if you don't want to run it, all you need to go on your on the blue line, right click, and when you get your list, just open hyperlink, and you can open it that way. But these are very good websites that you can start using to identify fiscal policies for the decades that you're researching. Once you have framed your decade, so you have explained why and how the 60s, the 70s, the 80s, the 90s started the way they did, you can focus on the policies of your decade. So in this element, in this slide, you will be focusing on the policies that were enacted during your decade. If you chose the 90s, you're going to do policies of the 90s. 70s, policies of the 70s. In the 50s, policies of the 50s. You're going to explain, so use the slide to list those policies. If you want to put a few keywords, you may. Use the speaker notes to develop the content and explain what those fiscal policy entailed and what the intent of the fiscal policy was. We don't want to know here what the outcome of the fiscal policy was, but what the intent was. Why was that fiscal policy enacted? Was it enacted to reduce inflation? This is where you will write this. It doesn't matter whether it worked or not, because that is a discussion for the next slide. All you want to do here is find out why that fiscal policy was enacted. You can use macroeconomic principle and models to show why that fiscal policy, the intent of the fiscal policy. For example, if you're doing a fiscal policy that will boost the economy to reduce unemployment, you can show that on the aggregate demand and aggregate supply model, like how fiscal policies may affect a model. To know and to find out how they would affect a model, go to the My Econ Lab resources and find the module where it talks about aggregate demand and aggregate supply, and you can download the PowerPoint, and there'll be graphs there that show you how fiscal policies affect aggregate demand and aggregate supply, and you can use that chart and include it in your you can include it in your PowerPoint as long as you cite it and reference it. So you would cite and reference Hubbard because those PowerPoints are from Hubbard. But there you can find charts. They have, when you go on the fiscal policies modules for Hubbard, there will be a chart that shows you how like an expansionary fiscal policy affects a aggregate demand and aggregate supply, or how contractionary fiscal policy affects it. So use those models to explain what the intent, like what was the government trying to achieve when they passed that fiscal policy. Again, use the slides for key and core concepts and developed all the content in the speaker notes. If you don't know how to use the speaker notes, if you're not sure, go to the YouTube SNU channel. The link is under the final resources, final project supplemental resources. And in there, you have to dig a little bit because there's like 20 videos, but there's a video that shows how to add speaker notes to a PowerPoint. There's also another video that shows you how to save your PowerPoint as a PDF, including the speaker notes. So there's a lot of very useful videos in there, how to use Fred, that you can use for your milestones and for your final. Once you have established the fiscal policies, you can focus on the impact of those fiscal policies. So where before you were explaining the intent of the fiscal policies, what were they trying to pursue, in this slide, you will actually explain what they did accomplish. So if the intent of the policy was to decrease unemployment, it's here in the fiscal policy impact that you will explaining if the policy actually did reduce unemployment or it did not reduce unemployment, what impact it had on the GDP, what impact it had on inflation. Use the data that you researched in Milestone 1. You can go look at the data you have from the charts and from your speaker notes regarding the years coming after the fiscal policy, and you can identify the changes in the economy that would have stemmed from the fiscal policy enacted. So look at the macroeconomic data that you have already researched. Use that research. Don't research new one. The other element that you need to include in the fiscal policy impact is explain how individual households and businesses were affected by the fiscal policy. If there was a fiscal policy that reduced corporate taxes, how did it affect those businesses? Did the businesses invest more in new technology, new infrastructure? Did they increase salaries? What did they do with the benefit of the reduced corporate taxes? If the fiscal policy increased spending in certain sectors, how did it affect? Like in the 1950s, there was the Highway Act. New roads were built. How did those new roads affect individual households and businesses? I mean, more trucks could have gone transporting goods. You could travel more because you can travel by car thanks to the new highway system. So how did it impact households and businesses? If you include all this information, you will be exemplary and you will not have to rework this slide for the purpose of the final. So just remember that just because the intent of a policy was one, it doesn't mean the impact has to be the same. The impact might be different because the government misread the economy. They just implemented a fiscal policy that was not effective in the way they wanted it to. It might have a different effect. It might have a different benefit, not quite the benefit they were searching, and that is okay as long as you describe it in this slide. Use the slide for the key concepts, and then you can use the speaker notes to develop the content. And it's in the speaker notes that you will be required mostly to apply APA formatting guidelines by including the citations of the references of the sources you reference at the end. Just remember, every citation needs to correspond to a reference at the end. You can have one source cited in multiple areas because you might have used it more than once, and that is fine, but every citation needs to correspond. So if you cited Hubbard, then Hubbard needs to be referenced. in the end, because the reader sees that you use that source and they need to be able to go to the end and look at the information you have for that source and go look it up just to confirm that, or go read more about it if they have an interest. So that is what the references and the citations are for. And also it shows that sometimes you didn't use, it's not like your self-knowledge, you researched it, you backed it up, and you want to show where you found it. And this is all for Milestone 2. It is pretty streamlined, and if you get Milestone 2 right and read really well your instructor's feedback, you will have no problems completing Milestone 3 next week, because Milestone 2 and 3 go back to back. So work really well on Milestone 2. Read your instructor's feedback really carefully, because Milestone 3 will be structured exactly in the same way, with just a focus on monetary policies as compared to fiscal policies. We have a few minutes left for questions. I know there's not many of you for Echo 202. I guess this is Thanksgiving, night before Thanksgiving. A lot of people are traveling, visiting family, and they know that they can access the recording. This live video is recorded, and it will be available starting tomorrow through the Southern New Hampshire YouTube channel. It's called the SNU Echo channel. And so if your instructor doesn't post it immediately, because they probably won't be posting tomorrow since it's Thanksgiving, Jimmy, detail in the fiscal policy. You don't need to have a lot of detail. You just need to include the main points of a fiscal policy. So what decade are you researching, Jimmy? Yeah, you're doing the 90s. So for example, if you do, there were two OBRs in the 90s, which were the fiscal policies that focused on the budget. You just want to put the main points, because fiscal policies usually include 1,000 elements. But what were the most important? What was the main focus of that fiscal policy? And then just stick to that one, to the main focus of the fiscal policy. Yeah. Otherwise, you're going to get lost. And also, when you go and try to establish the intent, I mean, they try to sneak other things in the fiscal policies, and you really don't want to get lost in that sort of in that maze. Yeah, you don't want to get lost too much into it. There are students that might go for slides and slides examining a fiscal policy, but that is really not required. I would say that in general, you might want to find 2 to 3 fiscal policies for your decade. The most important ones for Clinton are at least the 2 OBRAs, and then he did a tax reduction towards the end of the 90s. He decreased taxes, and I think that those 3 are the big highlights of his of the 90s that had the greatest impact. So just focus on his main focus was to reduce the budget deficit. That was the main focus of his fiscal policy. Identify the intent, and when you do the impact, you do want to say, okay, he was able to reduce the budget deficit, but that is not the impact on the economy. When you do the impact of the OBRAs, you actually want to see how the GDP was affected, unemployment was affected, and so far. Yeah, exactly. The same for Bush. So for example, like the fiscal policies of the 90s, they call it there was no employment growth in the 90s. So there was economic growth, but employment didn't seem to grow at the same pace. So that is something that you will be highlighting in the fiscal policy impact, at least for the first part of the 90s. Do you have any more questions, Marlene or Imran? There's the 3 of you left. So you have 10 minutes. You can ask all the questions you want, and I'll be able to answer them. You're welcome, Jimmy. I'm glad you resolved the issues with Adobe and are able to participate. Oh, you're welcome, Marlene. Oh, it was Chrome. Yeah, it can happen. You're welcome, Imran. If you don't have any more questions, we can actually close the session. since there's only the four of